Hei alle sammen, velkommen til et nytt og spennende arrangement i samarbeid med Nasdaq. Mitt navn er Johannesen og jeg er investeringsøkonom i Nordnet. Først og fremst så er det lenge siden vi har gjort eventer nå, og det har jo sin grunn til i forhold til dette med korona, så det er jo veldig gledelig nå at vi har fått med oss gode folk fra flere steder i verden. Jeg skal blant annet sette over til Sylvester Andersen i København litt senere, som dere også ser på bildet her. Og så skal vi også få flere spennende og interessante personer fra USA. Så dette her blir et veldig sånn internasjonalt og bra arrangement, og det håper vi blir veldig bra for dere kunder. I forhold til året som har vært i Nordnet, så har det vært et fantastisk år. Det har dere sikkert sett også, både på børsen og på kundestilstrømningen vi har hatt i Nordnet her. Og det er vi jo veldig glade for. Og det har i den forbindelse kommet veldig mye spørsmål i forhold til dette med denne produktlanseringen som vi har hatt med Nordnet Markets og da derivater og opsjoner. Så det er dette her det foredraget skal omhandle, der vi får inngående kunnskap i forskjellige typer teknikker, strategier og ikke minst instrumenter som eksperter fra Nasdaq skal forklare oss. Og så er det også viktig å huske at det er forbundet med en risiko, dette her med å handle med derivater og i slike tradingprodukter, så bare vær obs på det, og ved å ha disse typer sammenlignende som vi har nå, så lærer man også mer, og da blir mer bevisst den risikoen man tar. Men som sagt, vær veldig bevisst på at dette her er risiko, og at man må håndtere det med varsomhet. Og egentlig da tror jeg vi bare kan sette over til København og min gode co-host Sylvester Andersen som står i København. Vær så god, og velkommen til deg, holdt jeg på å si.
Tusind tak, Mads. Jeg håber, I kan høre mig derhjemme foran computer og iPads, og hvor folk ellers sidder. Ja, tak for introduktionen, Mads, og tusind tak til Nordnet for at være vært for det her vigtige arrangement. Mit navn er Sylvester Andersen, og jeg er medansvarlig for vores norske og vores danske aktiemarkeder, derivatmarkeder og exchange-traded products-markeder, investeringsforeningsmarkeder. Jeg har været hos Nasdaq i 14 år i forskellige roller på datasiden og især på transaktionssiden, som vi skal fokusere på i dag.
Og så bare for å bryte inn også, Sylvester, så må jeg si det at det er også mulig for dere og dere som sitter og ser på dette her å stille spørsmål, så det kommer da opp en chatløsning og ikke minst da en e-post-link som da vil ligge under her, bare for å få si det. Beklager å avbryte, Sylvester.
Overhovedet ikke, Mads, og jeg er helt enig. Min forhåbning i dag for de investorer, som sidder og kigger med og bruger Nordnet-platformen, det er, at det her i dag, det bliver så relevant og vedkommende som overhovedet muligt. Så any questions I har til nogle af paneldeltagerne i dag, fyr endelig løs. Jeg skulle til at sige, i Nasdaq, jeg tror mange er klar over, at vi er en global børsforretning, vi er en global dataforretning og indeksforretning, og Nasdaq er jo en sammenslutning af Nasdaq, men også af det gamle OMX, som var de nordiske børser, en sammenslutning af Danmark og Sverige og Finland og Baltikum, og igennem årtier også stærkt forgrenet i tæt samarbejde med det derværende Oslo-børs. Og det er jo ikke nogen hemmelighed, at vi i lang tid havde en forhåbning om at få vores norske brødre tættere til os i det nordiske samarbejde, og også senere hen i vores globale børsdrift af Nasdaq. Det lykkedes af forskellige årsager ikke, så Oslo kom i stedet for på franske hænder, og det er jo fint. Men det er klart, at vi som Nasdaq har egentlig valgt at gå vaks til værks i Norge, selvfølgelig blandt andet med vores derivat offering, som vi skal tale om i dag, og som jeg også fornemmer, der er et stort behov for yderligere kendskab til i Norge. Vi har derivater, optioner og futures på 27 underliggende. Vi har forskellige andre derivatrelaterede offerings, som vi er rigtig glade for. Vi er markedsledere på derivatsiden i Norge. Vi har blandt andet lige knap 80% market share på optionssiden, og en rigtig god market share også på indekssiden, index futures siden i Norge. Og det er vi selvfølgelig meget glade for. Men jeg tror, det er vigtigt at slå fast, at Nasdaqs engagement i Norge er meget dybere end det. Vi har et rigtig fint samarbejde med en række norske aktører på det, vi kender som sustainability og ESG. Altså med at hjælpe investorer til at træffe bedre og mere bæredkraftige investeringsbeslutninger. Bare for at nævne et enkelt emne. Og jeg vil sige, vi har selvfølgelig i Nasdaq bemærket det her kæmpe retail boost, som har været i Norge, måske klart symboliseret ved Nordnets vækst. Jeg ved, at Nordnet de sidste halvandet år er gået fra 100.000 kunder til 300.000 kunder, og det betyder, at Nordnet i virkeligheden hjælper 200.000 nye investorer på markedet til at tage ansvar for deres egen økonomi. Og det er selvfølgelig noget, vi i Nasdaq kigger på med stor interesse, og vi ved også, at vi som børs har et ansvar for at bidrage aktivt til kundskab og til kendskab inden for forskellige aktivklasser. Også optioner og futures, som vi skal tale om i dag. Og så vil jeg sige en sidste ting. Nu sad jeg og kiggede lidt på vores megler-statistikker her til morgen, og jeg synes, det er meget bemærkelsesværdigt at se, hvordan Nordnet er gået frem til at blive den største lokale megler i Norden, og selvfølgelig også i Norge og Danmark. Og det synes jeg sætter yderligere en streg under det væsentlige i, at norske investorer får al den støtte i forhold til at kunne agere i markedet på et godt informativt grundlag og kende både muligheder, men som Mads også nævnte indledningsvis, især på måske lidt mere komplekse områder, herunder også derivater, er klar over de risici, scenarier, som ligger i de forskellige aktivklasser, herunder også derivater. Så det er vi glade for at kunne tale mere om i dag, og jeg er også utrolig glad for at have to rigtig gode, rigtig kompetente kollegaer med mig i dag. Den første, som Mads og jeg giver ordet til om lidt, er Mackintosh. Han er vores cheføkonom. Han kommer og giver sit besøg på markedets trends. Hvordan ser han udviklingen? Og der er selvfølgelig en masse interessante elementer i verden i øjeblikket, ikke mindst covid, ikke mindst politiske ændringer i USA osv., som jeg tror og håber, at folk derhjemme, der kigger med, og jeg ved, jeg er meget interesseret i Phils observationer, og hvordan Phil han ligesom ser, at markedet reagerer på de her trends. Hvad for nogle sektorer nyder godt af udviklingen, hvad for nogle sektorer er lidt mere presset. Så Phil han går på scenen om lidt. Phil sidder i USA, og han vil lave sin præsentation på engelsk. Om folk stiller spørgsmålene på norsk eller engelsk, det går fint. Det tager masser af jeg, som det kommer, og stiller spørgsmålene til Phil. Efter Phil, så kommer min anden gode kollega Tony Zhang, som er chefstrateg på vores gode samarbejdspartner i OptionsPlay. OptionsPlay er en rigtig god fuld digital platform for læring og meget praktisk forståelsesramme for derivater, og vil give en god visuel indføring i, hvad optionshandel egentlig går ud på, før Nordnet ligesom tager ordet tilbage og illustrerer præcis hos Nordnet, hvordan man handler de her produkter hos Nordnet.
Som du sier, Sylvester, så avslutter vi da med Nordnet Derivathandel da, med vår sjefsmegler i Stockholm, Åsmund Sveen. Og da det også selvfølgelig muligheter til å stille mer spesifikke spørsmål rundt produktene som da Nordnet da tilbyr i samarbeid med blant annet Nasdaq. Så da får man da kall det spesifikk guiding på hva man kan gjøre på Nordnet-plattformen da.
Præcist. Jeg ved ikke, om vi har Phil med på linjen.
Jo, da det ganske straks at vi får sette over til Phil, Sylvester. Så han i dette venterommet som han har på Zoom. Sånn det jo når man har digitalt, og det over hele verden. Så han hopper straks over i pole position her. Der tenker jeg vi har han.
There you are, Phil. Hi, how are you doing?
Good. How are you?
All good here, Phil. Thanks for joining. So I was just introducing you as our chief economist and letting people know that you'll be walking through how you kind of see the market trends. But I think, without further ado, I'll just quickly hand it over to you, Phil.
Sure, no problems. We'll just share my screen, and because I like to talk about data, so I think it's easier if we have some charts in front of us to talk through. And I think the good place to start, just to talk about a market overview, is to look at globally how markets are performing. And we were talking this morning here about the fact that the US market is back to all-time record highs again. And that's despite the fact that we have our fourth wave of COVID. We have record numbers of kids in hospitalization. We have more deaths coming through. And it's kind of weird to think that the news is so negative, but the stock markets are so positive. If you look at the history, even the European markets are pretty close to all-time highs already too, but they've been much slower track than the track of the US market. The US market really has performed very strongly. Arguably, China is another interesting case study to look at because they tackled COVID very aggressively and first. They've had a zero COVID policy, which has been mostly successful, and they've benefited from the recoveries globally with trade. But their stock market has actually turned over and starting to soften, and it has been for months. So really different performance paths for different places in the world, but nothing to do with COVID cases, obviously. If we look at the US market from a valuation perspective, it's sort of interesting too, because obviously at all-time highs, you think the market might be expensive. But what this scatter plot on the right shows is every dot is a month. We've got the interest rates on the horizontal, and we've got the PE ratio on the vertical. And you can see as interest rates go down, the PE ratio goes up, and it's supported at those levels. And so a lot of people have said that because interest rates in the US are so low, it actually does support the valuations. And where we were a couple months ago, the orange dot, that's pretty true. We're pretty close to this gray trend line. I guess what you could say is we need earnings to come through. You can see the purple dots here. That's the tech bubble, where interest rates were a lot higher, but the PE ratios were stretched versus because obviously the earnings never came through. The prices went up on the expectations of tech bubble earnings growth, and it never came through. So that it turned out to be rich valuations. We also run the risk, I guess, if earnings don't come through, we run the risk of a headwind if rates do start to go up. And that's why the inflation conversation here is so important. And what the Fed's doing this week is so important in terms of tapering as well. If we look at a sector level in the US, it's kind of interesting. You can see a few patterns too. Obviously, we had the fastest drawdown and bear market in the US history. We've had one of the fastest bounce backs as well, but we can see it wasn't even across the spectrum. And so tech, which is the blue line here, has had by far the best performance. And that's another reason why the US market has outperformed the world, because we have a much bigger tech sector. We have a lot of the tech companies. Communication services, with the way that GICS redid their sectors, has a lot of the tech companies in it too. And so those two sectors have really benefited initially from working from home, but then they've also benefited from low interest rates and sort of growth of their PE multiples as well. You can see some other trends in here. Healthcare, has obviously not drawn down as much because this was a healthcare recession, but it hasn't really outperformed coming through as we've kind of gone back to work and started to think that we could get back to a new normal. But what you do see is once the vaccine came out, sort of around about the US election time, a bounce in energy, a bounce in financials, really a recovery in the value trade. And they started to outperform some of the growth stocks. Interest rates went up in this period as well, especially in the US with all the stimulus that was coming into the system. People really started to fear overheating. And so with the forecast of future rates, we just talked about the headwinds that growth stocks would face. We saw a pivot back to growth. That does seem to have faded recently, and rates have come down as well. So that's kind of the backdrop of what's going on. One of the interesting things we looked at when we were in the middle of COVID was what was going on in ETFs. And so on the right-hand side here, we created a score sheet that looked at ETFs with a lot of assets growth, excessive volumes, and big price returns. And so what we ended up doing was you sort of scored those scores together with a combo score, and we looked at which ETFs were the most interesting from a fund flows, returns, and trading perspective. And you can see the JETS ETF, which is global airlines, was really active on the way up in the green and on the way down in the red. So they came in at 1 and 3. You can see a lot of other thematic trends, though. That's what really came out, was how many people pivoted to ETFs during the COVID lockdowns to put on thematic trades. So looking at a recovery in construction, looking at a recovery in energy and oil, pretty clear when you look at some of the tickers that are in here. And also a lot of people playing cloud computing, online retail, which turned out to be big winners in the COVID work from home environment, as well as leisure and entertainment, which was, as we'll see in some of the data, really badly hurt and is a recovery story. So you can see some of the ETFs being used for thematics. So to sort of give some background into why people did all those things, it's kind of interesting to compare the level of stimulus and where the different countries are in a GDP perspective right now. So if we look at Europe, obviously huge amounts of stimulus in the system, but compared to other regions and compared to the US, not really much at all. So the US stimulus kind of does stand out as really significant. I think it explains a lot why our GDP is back above pre-COVID levels, where the rest of Europe's still down, recovering, and a V-shaped recovery, but not nearly as strong a recovery as the US, which sort of explains and ties back to the equity market performance as well. But what happened with that stimulus, obviously, in the US, and this is important for employment, is if you look at what people could spend money on back in the middle of COVID after we saw the V-shaped bounce, it was a lot of goods that people could buy with their stimulus checks. It wasn't a lot of services. We still couldn't go on holidays. We were still quarantining. People weren't that comfortable going into hotels or restaurants, going to sporting events. A lot of the sporting season was done with empty stadiums. And so there was a lot less spending on services. The real recovery in GDP has come pretty much exclusively through the goods sector. And so that's had a couple of interesting implications. One, you can see the goods line is below the services line. So there's a lot more employment in the services sector, which explains why the GDP recovery here has been far outpacing the employment recovery. We still have about 7 million people looking for jobs, even though the unemployment rate doesn't really show that. But the goods sector has also had other pressures. If you look at sort of the sector by sector outputs, you can see a lot of home supply, a lot of construction sector did really well. And you can see the airlines, cruise lines, movie theaters. I won't give away what happened after January just yet, but the services sector you can see really did struggle in terms of spending, in terms of their economies. What you can see when you look at retail spending as well is the impact in the US of the stimulus checks. So we had huge stimulus checks pretty quickly after the COVID lockdowns, and then we had a couple more stimulus checks in January, and then once Biden took over in February, March. And you can see as soon as those checks went out, spending in retail picked up. We're actually starting to see that sort of taper off a little bit. People are now having to dip back into their savings. Spending is still at a very high level, but it hasn't been growing like it was when those stimulus checks came through. And so you can see the impact of the stimulus check on retail sales, which obviously flows through into product demand and the manufacturing sector, you can also see the impact of that if we look at things like inventory levels. So inventory levels fell really quickly, and they've been getting tighter and tighter as the recovery has gone on, to the point where a lot of manufacturers, a lot of clients that I'm talking to, issuing clients, have been asking lots of questions about shortages, supply constraints, and just the costs that are starting to accrue for manufacturers and producers. So on the left-hand side here, we can see different shipping rates, which have gone up from relatively low levels, more than five-fold increase in some cases. And customers have been talking about this as well. They are definitely seeing not only bottlenecks at ports, but just a much higher cost of shipping all of the trade that's been, I guess, fired back up and gone back to COVID levels, pre-COVID levels too. That has translated into an increase in input costs and also an increase in output prices as well. So you can see some pressure here. This is prices paid indexes on the manufacturing side, pressure on inflation, which is just starting to moderate a little bit as everybody, I guess, gets back to normal, stops spending all their stimulus checks and starts going on vacation. But real pressure on producers, on their prices, on their margins, pushing through into inflation in the US, and a fear here that we might be overheating our economy. But as I talked about, the services sector really is where the unemployment situation needs its help, and the vaccines were very important to get the services sector going again. You can see that in this chart here. And so we sort of stopped that last chart in January where the movie theaters and airlines had sort of flatlined. You can see once the vaccine started to roll out in the US, confidence to do those things, consumers very quickly got back on the train, so to speak, or literally, airlines, movies, going back to the gym, everything picked up much more quickly after the vaccines rolled out. We have, up until recently, seated diners back at pre-COVID levels. So we had a lot of those services sectors with demand really quickly picking up back to pre-COVID levels because of the confidence the vaccines gave us. And what that did was it did increase employment. What happened was a lot of people still weren't ready to come back to work for health reasons or because schools weren't open, and so looking after children was a problem. And so we've actually seen a lot of pressure on wages, and I've been hearing this from talking to issuers as well, is, if you're in even in the manufacturing sector, but if you're in the retail sector, if you're in the hospitality sector, the pressure on wages to try and keep people, to try and get people to come to work has been dramatic, and you see big wage inflation pressures coming through on the services sector too. So what that's translating to, if you look at the real data in the US, is the inflation numbers here are very strong, much stronger than we're seeing in Europe, although there is an uptick in inflation. And the levels of inflation, the headline level, which includes all items, is if we kind of skip this, which was a hurricane-induced shortage, multi-decade high levels of inflation in the US. Remember, the Fed targets a 2% inflation rate. So right now we're well above 2%, and it's been this way for a couple of months now. The Fed tends to look more at the core inflation number, which takes out some of the things like food and energy that sort of have supply constraints and cause price spikes that come back down to normal, very short-term price spikes. But even the core rate of inflation is well above the Fed's target rate. And that's why when we saw the stimulus money coming through after the election, a lot of people bid up the interest rates, or I guess sold off the 10-year treasuries. And we saw interest rates go up 100 basis points in the space of about 6 months. And that created some headwinds for stocks, even as the recovery is happening and as unemployment was getting even better. So when we look at, like I said, talking to issuers, some of the mentions in company earnings calls, inflation is definitely a hot topic. A lot of customers on the issuer side, a lot of companies are talking about price pressures, inflation pressures, input costs going up. So really in the US, we have kind of two different, I guess, tail risks that people are talking about right now. And meanwhile, the market's sort of chugging a little bit sideways, but at pretty close to all-time highs. When we look at the returns in the US for the last few years, you can see the returns here are all positive, the little blue dots. Most of 2019 and 2020, though, the reason the market was up was this orange bar, which is the expansion of price earnings multiples. And that happens, like we talked about before, when the interest rates go down, you can slide up that PE multiple rate. And so you can see in the 10-year rate, 2019, 2020, interest rates were falling, PE multiples were helping stocks to grow. That's all changed. So the difference we have now in 2021 is the outperformance of the market's being driven by earnings. We've actually seen rates start to tick back up a little bit, and so that's held the PE multiple expansion back. It has already become a bit of a headwind on stocks, but earnings season has been very strong, and we've already seen through all the data, there is a lot of demand in the US, there's a lot of stimulus money, there is still quite a lot of savings, people are coming back to work pretty quickly. There is a risk of overheating. The Fed's obviously meeting this week. The expectation is they're going to start tapering at some time, if not late this year, into next year. And we will start to then talk about whether rates go up and how much and what that does to stocks from an overheating and rate rising perspective. Of course, the flip side is what could happen if COVID takes over. And it's kind of ironic because overheating is a risk of things getting too hot. COVID is a risk of things getting too cold. We know in the US, we got our vaccinations going sort of January, February. We had a big head start on Europe, but countries like Canada and Europe have now caught up to the US and passed us in terms of the vaccination rates. And because of that, the US fourth wave of COVID is looking pretty dramatic. And you can see in the consumer confidence that came through this week, we had, as we kind of came out of COVID with all stimulus money, confidence was coming back, and the last couple of weeks, confidence has again plummeted. So the impact of COVID, even if we've learned to live with it, even if it hasn't really slowed the economy down anymore, it's definitely changing consumer confidence. And we can see that happening across restaurant bookings. We can see it changing consumer patterns in terms of airline bookings and hotels and travel. And that's obviously going to change company earnings projections and revenues potentially as well. So COVID is this opposite tail risk of a slowdown. We're seeing the slowdowns happen around other countries in the world as well. So if you look at the data coming out of Asia, a lot of those countries are back into lockdowns. They're not very well vaccinated, and their economies are slowing because of their lockdowns. So COVID is still a global risk. A lot of economists talk about it being a bigger risk for emerging markets where the vaccines haven't made it. The costs of vaccines per person are much, I guess you'd say, more prohibitive to be broadly vaccinated than countries like Europe and the US, where we're talking about booster shots just to keep people healthy enough that we're not in hospitals. So it's sort of a different problem to solve in the emerging markets world if COVID starts to spread there more than it has so far. India obviously excluded. The second thing that's interesting to talk about in sort of the second half of the time that I've got is just to look at what's going on in the retail land of the US especially, and that also is related to stimulus checks. So if we look at what happened to personal income and consumer spending in the US, you can see the two stimmy check periods here boosted income significantly. So the amount of stimulus was in the orders of trillions of dollars, actually created an increase in income, even though we were going into COVID lockdowns. And ironically, the people that still had jobs weren't spending because they were in COVID lockdown. So they were cooking for themselves. They weren't going on holidays. They weren't flying in planes. And actually, we started to save money if we still had jobs. People that didn't have jobs got stimulus checks, and the net gap between income and spending increased. And that happened around the world. If you look at some of the data, people expect that the amount of net savings from employed people not spending as much and from unemployed people with benefits adds up to nearly $4 trillion in that sort of period of time. So that's a huge amount of extra cash that people have to deploy. And in the US, what's interesting is just looking at whether people deployed that into the stock market. So there's a few different places we can look to see whether that's true. This chart on the left looks at the number of trades that happen per day at retail brokerages, and a couple of things happened around the time of COVID. So late in 2019, in the US, almost all of the brokerages went to a zero commission world where you can trade for free. And then you can see that definitely had an impact on some of their customer behavior where trading started to increase. And I guess arguably it nearly doubled in the next sort of quarter or so. But really, the big increase seemed to happen when the COVID lockdown happened. And so people were at home, they might have been unemployed, they had all these stimulus checks, a lot less things to do with their time, and we saw a huge increase in retail trading activity. And I can show you a couple of other charts. It sort of seems to be the case that retail activity, retail contribution to US liquidity has increased significantly during the stimulus check environment. This chart on the right is just one example. So this is looking at people downloading the Robinhood software. So Robinhood is it's a new IPO on Nasdaq. It is a free commission broker. It has been since it started, but it's a relatively new one. And so they saw a huge amount of downloads of their software when the stimulus checks came through, which is sort of, I guess, a sign that people with their money were looking at ways to now trade in the stock market. We can also look at some of this data from the marketplace, looking at net buying of equities. And so typically in the past, the retail customer base was a slight net buyer of stocks, actually a slight net buyer of ETFs, net seller of stocks if you look at the data in detail. But sometimes they'd be net sellers of the whole market. Sometimes they'd be just small buyers. Remembering this is in billions of dollars a day, and the US market trades about $400 billion a day. So it's not a big percentage of net demand, but what's happened since COVID is day after day after day, really consistently, we have seen a complete shift in the net buying activity of retail to becoming the net demander of stocks at a pretty significantly increased level, even if it's not that much of the underlying market liquidity. Another way to look at what might be happening with the US market is just to look at how much the trading from retail contributes to the overall market. And so you can see in 2019, we talked about the free commissions increasing trading. And then we talked about in 2020, COVID lockdowns looked like it increased trading even more. Some of the data that we're looking at in terms of how much of the total market in US is retail trading stocks shows it's increased from about 15% to 24, maybe even 25% of the underlying market, like a huge amount of stocks being traded by retail. It's a little bit less if we look at it by notional, because the retail marketplace likes to trade lower price stocks. So they tend to trade more ADV than they do notional, but a big increase in their stock trading. But more significantly, you can see retail investors are trading more options as well, and they've become close to 1/3 of the underlying options, or at least exchange options market, from a base much lower than that. So they've almost doubled their usage of options as a percentage. At the same time, the options markets itself here have increased significantly as well. So options are becoming a much bigger contributor to what retail are doing and what the whole market is doing. So I guess if you're a retail broker, this would be the point where you would do a confetti drop, and you'd sort of congratulate yourself on how well you'd managed to, be a part of the market, help retail investors invest, help US households get exposure to equities and dividends and growth. But that confetti drop attitude itself sort of leads me on to the last thing I was going to talk about, which is 2021 retail trading. Really the hot topic is just retail trading growth and the sort of the broadening of stock ownership to what's happening in meme stocks. And I think the right place to start, if we're going to talk about meme stocks, is just to talk about the fact that it is not broad-based. It's a relatively small basket of tickers. So in the US, we have about 6,000 companies listed in the US, and the meme stocks typically are about 20 different tickers that trade in, small rotation, but some of them have been pretty consistently in this list through time. And what's interesting, it's also been a social media phenomenon, and I think that'll be important, sort of obvious why it's important in a couple of slides, but it's been driven by people on Reddit and Facebook, so platforms that aren't classically investor regulated, but people that are talking at a pretty sophisticated level about tickers and about stocks and about trading. And it's generated a huge amount of activity in just a few tickers. So if we look at, this is looking at price change, but we look at some of the price gaps that we saw in January for some of these tickers, they really were, I want to say off the charts, because I had to rescale this chart a number of times to get these lines to work. And then everything sort of calmed down. And just recently, we've seen another spike where AMC was one of the favorite stocks, but GameStop again, really trading up a lot and trading a huge amount of volume. So these small baskets of stocks were 18% of all volume in the recent spike. They were 31% of all volume back in January, February. So a huge amount of ADV, not so much a percent of value because they were low price to start, but a massive contribution from a small basket of stocks. So hyperactivity in just a few stocks. The thing that's interesting is, why did this start in January and why did it restart in sort of late May, June? And one of the interesting things, if we think about it being a social media phenomenon, is obviously before Jan 6, when we have the Capitol riots here, social media was probably focused on politics in the US. There was a lot of tweeting. There was a lot of, I guess, focus on what was happening in the election on Twitter. A lot of the people were sort of consumed in Facebook in the election stories. January 6th wasn't just the Capitol riot, but Facebook and Twitter restricted a lot of the people that were being followed from being able to post. And so it kind of pivoted social media from being very politically focused to needing to be something else. And maybe some of that something else turned out to be finance blogging. The other thing that happened in the middle of that zone is Bitcoin rallied to all-time highs and then fell back down before we saw that second wave. So I could sort of think of the Bitcoin craze is part social media as well. It's driven by people tweeting about what they're doing with Bitcoin, whether they like it or not. Not necessarily fundamentals-based valuation, but just belief in whether this will fundamentally change payment systems in the world going forward or not. And it's a little early really to tell. So if we sort of drill down a little bit into what actually happened in those meme stocks and why they rallied as much as they did, it really was a couple of factors above others that from a market's perspective made the prices rally so much. And especially in the January period, the tickers that were focused on were a lot of the tickers that have very high short interest in the US market. It was almost a philosophical targeting at highly shorted stocks. And obviously, if you want to short a stock, you typically, and in the US, you absolutely have to borrow the stock first so that you can deliver that stock to the person who buys it from you when you short sell it to them. So the settlement system isn't disrupted. And so if somebody wants to make the stock go up, or somebody buys the stock up, you're short, so you lose money on the short, you'll have margin calls. And if you try to cover the short, you will buy the stock back, so you'll make the stock go up even more. And so a lot of these stocks, when they started to rally because of the retail buying, it caused some of the hedge funds that were shorted the stocks to actually have to cover for margin call reasons, or just because they didn't want the risk. And so they bought back as well. You can see actually in the data how quickly the orange, red, and green blobs showed the amount of short interest collapsed within weeks. Each of these blobs is 2 weeks apart. And so the hedge funds pretty quickly got out of all of the stocks that were highly shorted, which made their prices go up more. But it also means that these stocks aren't so heavily shorted in the market anymore either. The other thing that happened both times, but you can see it in this chart, which is from the second wave of the meme stock trading, is a lot of the trading was done in options. And so in calls specifically, if you want to position yourself long in a stock, a call obviously gives you that upside exposure with a little bit of leverage and some protection on the downside. And you can see in terms of the notional premium being spent in the market on this one day, AMC, which obviously was the stock we talked about with the biggest price bump, was overwhelmingly the biggest stock for notional trading, but also overwhelmingly call buying. And what that does is the options market has lots of different calls and puts and strikes and terms to maturity. You really do need a market maker on both sides to be able to facilitate the retail trader coming in or the natural trader who wants a very targeted options contract. And so when the buyer of the call comes in and hits the other side, a market maker has a short call and they have to go hedge by buying stock. So it's kind of similar to what hedge funds had to do by buying stock for margin calls with shorts. The market maker has to go and buy the underlying stock because of the call buying, which pushes the price up, which actually in options creates the delta to increase on a call, which means you have to buy more. And so if the price rises too quickly, you actually get the options market makers will add to the buying because they need to add to their delta hedge to keep their book flat. You can see the small selection of stocks here was a huge amount of volume and of the value, obviously. On this one day, AMC traded multiples of SPY, which is the S&P 500 ETF, and SPX, which is the S&P 500 index options products, more than Qs, which is the Nasdaq 100 ETF, more than Amazon options in notional, which is obviously nearly a $2 trillion company. So really exceptional activity in one ticker, which is a relatively small ticker. And what that translated to was just incredible amounts of volume trading in those tickers as well. So this is one day back in the first wave in January 27. GameStop, you can see the thickness of the line here is the market cap of the stock. So GameStop, AMC, really low market cap stocks, but trading 20 billion, nearly $30 billion in a day. That's more than Tesla trades in a day. It's more than Apple and Microsoft and Amazon trade in a typical day. And so a huge amount of trading, more than their market cap actually, in one day. So you can kind of see the impact of the retail activity. I would call it hot money because it really does seem to come in and go pretty quickly. And it just creates so much turnover in the stocks, much more than much larger stocks typically see in the market. So I guess the last thing to note is, if people are buying AMC, if they're buying GameStop, I mean, are they right? Are they wrong? And we don't really know whether the stocks should go up more than they were, whether the shorts were wrong. But one of the interesting things is you could say with AMC, it's a theater chain. So it plays movies in theaters around America. And when you looked at when the rally started, movie theaters were pretty much underattended or unattended. So movie theaters had a huge amount of upside, and that was one of the potential arguments for why AMC should rally. But when you look at valuation, so here we're looking at revenues on the horizontal axis and market valuation on the vertical, and you can see other movie chains over time, if they grow earnings, they grow valuation in a pretty linear way. What happened to AMC is its earnings obviously fell, but its market cap went up because people bought it so aggressively. Obviously, we need to look forward because it's a stock and it's all about growth and future earnings. But at the valuation that it got to, its future earnings would need to be literally off the screen to keep track with the horizontal line. So there's a big question in terms of whether the people watching the social media here, whether those investors are being protected. And that has focused the SEC's attention a lot on what's happening in retail here, on investor protections, on the gamification, hence my discussion about the confetti drop. And I think it's refocused regulators here a lot on the retail side of the market, which initially the growth in retail was really good for households to get more households in America into stocks. But there's a concern, I guess, for investor protection. And at that point, I can stop. I don't know if there's any questions in the Zoom.
Hey, Phil, thank you very much. Very, very educational. There are actually a couple of questions here. And I can see that that one of them is referencing back to your segment around the pandemic and the impact of the pandemic or expected impact of the pandemic. And it's also related to another big driver here in Europe, which is ESG or sustainability, if you will. And it goes like this. In an ESG context, as the pandemic will hopefully soon play a secondary role, do you see green/climate becoming a number one priority on the sustainability agenda again over social?
What an interesting question. I mean, the interesting thing here is since the election, and it's probably partly political because of the change in parties, the US has completely changed its focus. The new SEC, which is our regulator here, has a much bigger focus on ESG, on adding disclosures, on knowing more about what companies are doing for the environment and trying to encourage it. Obviously, Biden has a whole infrastructure plan that is trying to grow solar and get away from carbon emission industries and change the economy like that as well. At the flip side, though, is a really interesting question about whether the ESG scores and whether greenwashing is something people talk about a lot, whether it actually adds alpha to a portfolio. And so I think we don't really know if it adds alpha because we don't really have good enough data yet. I feel like you're right. We could start to focus on the environment better. The fact that we've had such a bad couple of years in terms of environmental disasters the fires here, the fires in Europe, the fact that there's talk about the Atlantic currents starting to slow down and Greenland having rain. There's a lot of different things going on that theoretically floods in Miami will make people's attention shift to whether or not humans have caused it, whether humans can stop it, because it's going to start to cost us money, just like COVID cost us a bunch of money. I think the next step is going to be trying to find the factors that actually make a difference. And so there's a huge amount of activity all of a sudden going on in that space. I think there is definitely money flowing into the space, looking at the ETF flows. A lot of people are starting to put money into whether it's ESG funds or just some of those thematics, the solar thematics, the sustainability ETFs generally. I think it's definitely a trend that's starting to grow again, but it's coming from a really low base. And what we really need is good data, globally consistent data that we can not audit, maybe isn't the right word, but trust. And then we need to build portfolios that still perform really well based on doing the right things. And I was reading an interesting article the other day that said, really some of the stuff that we need to fix the environment needs governments to agree, like the Paris Accord, like carbon emissions costs, because there's a lot of free riding. You put smoke into the air, it doesn't really cost anyone anything unless there are carbon penalties, and carbon penalties need to be equal across the world, or else different countries are going to arbitrage it. And so there's a few things that I think governments globally need to agree on to get everybody on the same page on that as well.
Hi, Phil. Question here also from a customer. Their Jackson Hole conference are approaching pretty soon. What are your predictions? For example, inflation, any rate hikes or something? Do you have any thoughts about the Jackson Hole meeting approaching soon?
Yes, I think the consensus is it's summer. Even though it's Jackson Hole, they won't come out with anything radically new just yet. But there's been a couple of speeches that some of the voters have given offline or sort of separate to the actual official meetings recently, where they're starting to talk about the taper, and they're starting to talk about the fact that overheating is something we at least need to keep our eye on. I think if you wind back 3 or 4 months, the feeling was that the Fed was so stubbornly avoiding the inflation conversation and saying that everything that we were seeing was transient, that they were going to be way behind the curve, and we would have inflation, and then we'd have wage growth, and we'd have permanent inflation, and we'd have a different problem to solve, which would make rates go up for sure, but on a delayed cycle. I think now the market, and part of the reason rates have come back down, ironically, is the market's getting more comfortable that the Fed is watching this stuff. I think the expectation is still late this year, so maybe even December, they'll start to do the tapering, and tapering just means buying less bonds, not starting to sell out their balance sheet that they've accumulated, not increasing rates just yet, although obviously not buying as many bonds might make supply and demand push rates up a little bit. It's a really interesting perspective, though, thinking that Biden right now is trying to push through a $3.5 trillion infrastructure package. We need to approve a new debt ceiling here, close to $30 trillion. Part of modern monetary theory involves, I guess, what Japan has managed to do, which is have huge amounts of debt to GDP, but also keep rates very, very low. And so if rates go up, if we have inflation and rates go up, all of this debt that we've been loading ourselves up with is going to cost more just to service. And so I think what's going to be really interesting, maybe not with the Jackson Hole this week, but next year, the discussions from the Fed, how they react, how strong inflation turns out to be, whether rates really do need to go up more than getting back to inflation levels of 2 or 3%. It could change, pretty fundamentally how the US government is going to finance its debt and what the headwinds are for stocks. And so I think, there's a few risks out there in terms of headwinds for stocks. The good news, I guess, is earnings are growing quickly as well. And with the demand, there's a lot of demand for products. So margins are growing and revenue lines, the bottom lines are growing. But there is some concerns, I guess. The Fed definitely has to start thinking forward about rates and how they normalize and, what we need to do with the debt levels going forward and their own balance sheet as well. I don't think it's going to happen this week, is the short answer to your question. But it is definitely a good question because over the next 18 months, I think that's going to hopefully take over from COVID as the big story.
So the market will probably be pretty sensitive to the different members who are speaking to different conferences and then by the markets, I guess.
Yeah, and in reality, I think generally all of the governors are starting to get a little bit more, I guess, honest about inflation. And so the ones that were very, very stubborn about rates aren't going up, we don't have a problem, are starting to talk a little bit more realistically about the underlying data. And so the dot plot, as they say, is starting to move up, which usually means, you know, we're getting closer to rates starting to normalize.
Great, thanks. Yes, Sylvester?
All right, Phil, there are plenty of other good questions out there, but I fear, in the interest of time, we have to thank you very much for a very educational and inspiring segment. Thank you very much, Phil.
You're welcome. Thanks for having me.
And moving over to Tony Zhang, Chief Strategist at OptionsPlay. Are you with us, Tony?
Han kommer straks på, så vi bytter jo litt mellom engelsk og skandinavisk her nå. Men han er straks på, er i lobbyen, og han skal jo da forklare oss litt mer inngående da om det Phil også var inne på i forhold til forskjellige typer instrumenter, altså derivatinstrumenter. Så da tror jeg vi har den her akkurat nå, ja.
Hi, Tony.
Hi, thank you so much for having me.
Of course, how are you doing?
I'm doing very well, and yourself?
All good, thank you very much. So, Tony, the floor is yours.
Thank you. So, thank you so much for having me, everyone here today. Fantastic session by Phil discussing about the economics of the U.S. interest rate environment, as well as some of the introductions that he made about retail options trading. Very interesting. So what I want to do is take this to the next step and talk a little bit about option strategies that you as an investor can actually utilize in your trading, and more importantly, how you can access some of the tools that are available to you here in the Nordics to leverage and implement some of these strategies. So what I'll start off with is talking about a simple option strategy, generating income using options. And we're not going to get into advanced strategies. We're only going to talk about strategies that any of you who have currently owned a stock or an ETF in your portfolio can potentially leverage, doing something that you're already currently doing, but may not have thought of using options as the way to go about trading them. Then we'll talk a little bit about the OptionsPlay platform overview to give you a sense for how you can utilize some of the tools that are available to you here in the Nordics in order to analyze the strategies that I'll discuss here today. And then most importantly, I want to show you how you can utilize our income opportunity reports. These are reports that we generate on a daily basis to show you where are the best opportunities to generate the most income with the Nordic markets, and then show you how to execute those trades in your Nordnet account. We have a way to quickly for you to analyze a trade and then find that trade within the Nordnet platform. And then show you some of the upcoming options education, because I know many of you that are here today are relatively new to options and you're still learning. So we have ongoing options education. I'll show you how to access that so that you can not only get consistent market outlooks sessions where I talk a little bit about the Nordic markets and the different sectors and what's currently moving, as well as macroeconomics, but also teach you on specific option strategies. And then we'll open this up for Q&A here at the very end. But my name is Tony Zhang. I'm the Chief Strategist here at OptionsPlay, which is the tool that all Nordic investors have access to for free because of the partnership that we have with Nasdaq. So everything that I'm going to show you here today, you'll be able to access, and I'll show you how to do that at the very end. But the primary strategy that I want to introduce here today, for those of you that may be either experienced options traders or just getting started with options trading, is what we call a covered call. And a covered call is a strategy that is suitable for anyone who is a stock investor. If you invest in stocks or ETFs, covered calls are a way to allow you to generate income on those assets that you own in your portfolio, but at the same time, allow you to potentially sell the stocks that you own at a profit. Because if you think about the stocks that you own them for one specific reason. You generally own them because you think that the stock is going to rise in value. And what you want to do is you want to sell that stock at a higher price sometime in the future in order to profit from that. So as an equity investor, most traders are used to placing a limit order. So let's say I have H&M stock. It's currently trading around 214 crowns. Maybe I think the stock is going to increase to 230 crowns. So what would I do as an equity investor? I would place a limit order at 230 crowns and wait for the stock to rise. But as a cover call investor, I can obligate myself to the same thing, sell a 230 call option. And what happens is the difference between a limit order and a cover call is that I get paid income to sell that cover call, which actually has, like I said, the exact same obligation as placing a limit order, but doing so by selling a call option. So a cover call is simply selling a call option against a stock position that you own in order to generate income on that existing stock position. Because when you sell a call option, you have the obligation to sell the stock sometime in the future at a specific price. Now, what does that sound like? That sounds exactly like a limit order. The difference between the two is that when you sell a cover call, you get paid premium, or the buyer of the call option is paying you premium. That's your income. Versus if you place a limit order, you are not paid any income at all. So when you think about a limit order and a cover call, same obligations, but one pays you income and one you are effectively getting paid nothing to wait for the stock to rally. But there are a couple of limitations with the strategy. It's important to understand that limit orders and cover calls are not the exact same thing. A limit order you can place for any number of shares. So if you have 2 shares of H&M or 2,000 shares of H&M, you can place a limit order for that amount. When you're selling a call option, each contract you sell is only for 100 shares of the underlying stock. So you can only sell in 100 share block increments. So if you own only 50 shares, you cannot sell a cover call. If you own 250 shares, you can only sell 200 shares of it through a cover call, meaning you will still have 50 shares remaining. So you have to trade it in 100 share increments. That's one limitation. And the second limitation is that if I place a limit order at 230, as soon as the stock reaches 230, my limit order will get filled and I will be out of the trade. With the cover call, you have to wait until the expiration date for the stock to be above the strike price in order for your stock to sell. So there are a couple of limitations that you have. So it's not a direct comparison, but the two are very similar to each other. But the important part is to understand that when you're selling a cover call, you're going to collect premium, meaning you're going to get paid. And the income stream that you get paid is going to allow you to generate an income stream that's usually at least 2 to 3 times what you may collect on the dividend as you wait for the stock to rally so that you can sell the stock at a profit. And each time you sell a cover call, there are 2 possible outcomes. Either the stock reaches your target price. Let's say I'm looking to sell the stock at 230. Now, by the expiration date of the cover call, the stock can either be above $230 crowns or below 230 crowns. Those are your 2 possible options. Now, if the stock is above the strike price, you effectively sell your stock at the target strike price. Similar to a limit order, once the stock reaches that price, you get filled on your trade and you sold your stock potentially at a profit. If, let's say, the stock is below 230 crowns by expiration, at that point, you keep 100% of the income that you collected on that cover call. And what you can do is you can sell another cover call and collect more income and continue to wait for the stock to rally. And as long as the stock stays below the strike price, you can continue this cycle. And this is what we call a consistent income stream that you can generate from selling cover calls. And what you're going to find is that the average yield on a cover call is typically larger than the dividend yield that you would collect on a stock that you own. So I want to show you how to actually find opportunities like this, because we publish a cover call and short put report. We're going to talk about the cover call report here today. And the cover call report is organized for you based on the annualized return. So how much income are you actually collecting from that cover call? And what we do is we scan every single optionable symbol in the Nordic markets, and we sort it based on the annualized return. So if you look at the live report here, I'm going to show you the live report here. This is the report that you'll have access to, and I'm going to show you how to access this at the end of the session. But these reports are generated and sorted based on the annualized return. So what you can do to utilize this report is to simply go down the list of stocks and find the stocks that you own in your portfolio. Let's say you own Nokia as a stock that you own in your portfolio. This is saying that if you own Nokia, you can sell the October 15th 57 crown cover call, and that's going to collect roughly 1.2 crowns. Now, 1.2 crowns on a 57 crown stock is a raw return of about 2.27%. What that means is that you're collecting 2.27% of the stock's value in exactly 50 days. Think about dividend yields. Usually we tend to see most stocks have a dividend yield of 2-3% on the higher end. Occasionally we see one even higher, about 4 or 5%, but usually they're in the 2 to 3%. But that's 2 to 3% per year. This is 2.27%, 227 basis points in just 50 days. And what that annualizes out to, if you do that year over year, is 17% annualized return. So this is the type of yields that you can collect as you wait for the stock to rally. And keep in mind, the stock is currently trading, the stock is currently trading at 52 crowns, and we're telling you to sell the 57 cover call. And that allows you to basically wait for the stock to rally up to 57 between now and the expiration date. And what we have built into this report is the ability to simply click on the trade link here on the right-hand side to analyze this trade further using the OptionsPlay platform. So when you click on the trade link here on the right-hand side, what it will bring up is the OptionsPlay platform, which I will walk you through right now. The OptionsPlay platform is available to all Nordic investors completely free of charge with the current partnership that we have with Nasdaq. And what you're able to do is, whoops, I clicked on the wrong symbol, I think. Nokia. One second, my computer seems to have frozen. 1 second. Let's click on this link here again. Here we go. And when you click on the link, what it will bring up is the exact trade that we were looking at and in the OptionsPlay platform. And the OptionsPlay platform is designed to help you analyze a specific trade. As you can see here, I'm collecting 2.27% of the stock's value. That's the raw return, which annualizes out to 16.5% return over the next 50 days. So Nokia, if you own the stock, is a stock that pays 0 dividends. So if you're holding Nokia stock and you're waiting for this to rally, you're not getting paid any income while you hold on to it. This supplements that income stream at about 2.27% every 50 days. And if Nokia rallies up to 57 crowns, you are able to take profit and keep this 2.27%. If Nokia does not rally up to 57 crowns, then you keep the 2.27% and you can come back and do this all over again and perhaps collect another 2% over the next 50 days. And you might be able to do this multiple times. And one of the things that we have here is a metric called probability of expiring worthless. As you can see, it says about 76%. What that means is that I have about a 76% chance I'm going to keep the 2.27%, and I can do this all over again next month. So if I do this 4 times over the next 4 months, I'm going to expect 3 out of those 4 times I'm going to be able to keep my premium And the fourth time I do this, likely the stock will rally up to that strike price and I will sell my stock potentially at a profit. So these are the analytics that you can use to quickly look at a trade, and you can use the cover call report. Like I said, you go down this list, you look for stocks that you own. I know there are some very popular stocks here like Evo Gaming, Embracer, some of the names that people have really started to pick up during the pandemic. You can go across the screen, click on the stock, click on the trade link here on the right-hand side, and quickly analyze the trade that you're looking at. And one of the great things about the OptionsPlay platform and the links that we've built with Nordnet is that if you're interested in placing a trade, you can click on the trade button. And what we've built is this short code here on the right-hand side. So this Nokia October $57 call option, you can copy this short code and you can paste it into your Nordnet account. On the right, when you're in the options chain, you can go to search on the upper right-hand corner. You type in, or you copy the Nokia symbol that I just posted. Let's see. Not sure why the Nokia symbol wasn't coming up, but this one, LUMI, is coming up when I click on, when I post this short code here in Nordnet. When I paste this into Nordnet, as you can see, it'll find the options call that I'm looking at, and I can look at the current bid ask and start executing a trade to sell this cover call. And this is all designed to make the process for finding the trades that you can potentially generate income on your portfolio using the cover call report very quickly, using the OptionsPlay platform to analyze the trade to understand how much yield are you collecting over what period of time, and what is the probability of you keeping that income, and what is the probability of the stock being called away, and being able to quickly click on the trade button and execute that trade into your Nordnet account within just a few minutes from full start to finish. And that's really why we built this platform, and the tools that we have included here today is to help you take the things that you've learned, such as strategies like cover calls, but more importantly, show you how you have access to the tools to be able to actually implement these strategies in your own portfolio. And the new trade button that gives you the short code that you can instantly post into your Nordnet account is designed to help quickly make an execution or the trade as quickly as possible. So with that, I'll just quickly go through the OptionsPlay platform, just for those of you that are interested in other strategies as well. The platform itself we built this for to help investors, regardless of how experienced or new you are with options trading, to quickly find opportunities and analyze different option strategies for your portfolio. The tool itself is divided into 3 sections. You have trade ideas and watch lists on the left-hand side. In the middle, we have our security analysis panel. And in the middle, on the right-hand side, we have trading and income. And these 3 panels is what we call the what, why, and how of options trading. Because when you start your day, you want to know, what symbols should I pay attention to? We have fresh trade ideas that are scanned for you based on technical indicators in the morning. And you can also have build your own watch list. We have pre-built watch lists for all the major Nordic markets that you can quickly utilize, or you can create your own watch list so that you can click on a symbol and instantly populate the rest of the screen. And not only do we provide you with underlying data for the stock, such as 1 month and 6 month trends, technical scores, so that you can quickly gauge the directional view of an underlying stock, but also things like earnings and dividend data, so that you can quickly look at that type of information before you make a decision. And then you can either select I'm bullish on the stock and see 3 bullish strategies, or you can select I'm bearish to see 3 bearish strategies, depending on your view of the underlying stock. And we will always compare 3 strategies for you, such as buying the stock. So if you're brand new to options trading, you're probably familiar with buying the stock. The simple option strategy, buying a call option, something that Phil referenced before in the session earlier, and then also a more advanced strategy, a vertical spread. And even if you don't know anything about these three strategies, you can compare them side by side. You can look at a historical chart and you can say to yourself, what if AstraZeneca got back to its new 52-week high around 1,060 crowns? You can type those outlooks into the P&L simulator here at the bottom part of your screen, and you can see how much would you make if you bought the stock. You look at about a 3% return. If you bought the call option, you're looking at about a 23% return. On the call spread, you're looking at a 54% return. And being able to compare strategies, even if you're not familiar with those strategies, and get a sense for how much can you potentially make, and also how much can you potentially lose? What if AstraZeneca does not cooperate and it goes back down to this 950, 960 support level here? If it does that, if you bought the stock, you're looking at about a 6,000 crown loss. If you bought the call option, you're looking at a 3,200 crown loss. If you bought the call spread, you have only a 2,590 crown loss. So not only do you have the smallest risk with this strategy on the right-hand side, you also have the highest return if the trade goes in your favor. And that's why this vertical spread here on the right has an OptionsPlay score of 104. That's higher than the call and higher than the stock. It does a lot of the work for you so that you can quickly find a strategy, analyze it, and if it's a trade that you want to make, you can click on the trade button and take any of the short codes and copy it into your Nordnet account and potentially enter this for execution within just a few seconds. So that's just a very quick overview of the platform, the different tools that you have access to, and this is just showing you what we have to offer. So just give you a sense for some of the educational series that's coming up in the next few weeks. You can sign up for that educational series here at trade.optionsplay.com/OMX. You'll be able to have access to Nordic Market Outlook series that I do every single month, where I talk about where the Nordic market is from a macroeconomic perspective. I look at the major equity indices, I look at the sectors and what stocks are moving. And then twice a month, I do options education sessions. So the next one I'm doing is an option strategy rapid fire session. I'm going to cover a lot of different option strategies and kind of what the best practices is for each one. And I'll also talk about some of the more advanced strategies, debit and credit spreads here in October. So really looking forward to that. So if you want to sign up for this, you can. It's all free at trade.optionsplay.com/OMX. I will post this link into the chat window here in 1 second. And then if you want to sign up for the platform, like I said, the platform, the cover call reports, all free of charge to you. You can do that at optionsplay.se. I will post this into the chat window here in the live stream. So optionsplay.se to sign up for the full platform, and to sign up for the upcoming events, trade.optionsplay.com/OMX, which I will also post into the chat window here as well. So with that covers what I wanted to share with you here today. I really appreciate you guys taking your time this evening to learn more about options trading, and I want to thank Nordnet and Nasdaq for hosting this fantastic event. At this point, what I'll do is I'll open this up for a few questions.
Thank you very much, Tony. Well done. Well done indeed. I know there are already a lot of Nordnet users in Norway using OptionsPlay. And I think actually most of the questions we received were initially on how do I get access to OptionsPlay, but I think you just showed that very well, and I know that Nordnet has already been kind enough also to share the link in the comments section. So I think everything seemed crystal clear.
Yeah, and I would
that's great.
Hi Tony, I would just say provide the message on behalf of the customers. Very good presentation. We got a lot of feedback on your presentation, and everybody thinks it's very good. So thank you so much for that. It was really a really good and powerful walkthrough with a lot of learnings. So I guess a lot of customers will download the OptionPlay now.
Yeah, please go ahead, utilize the platform. Like I said, it's completely free of charge. We do education every 2 weeks. So hopefully I'll see you guys here on the next education event, learn more about options trading and have access to these tools. So with that, thank you so much for having me, guys.
Thank you so much. So so then we're going to switch off to a Nordic language, Tony. Der var vi av igjen, Sylvester. Da venter vi på, etter dette foredraget til Tony, som var veldig bra, veldig interessant å få med seg, så har vi da satt over til Stockholm, og vår gode megler i Stockholm, Åsmund Sveen. Velkommen, Åsmund.
Hei, takk skal du ha.
Da skal vi gå inn i siste seksjon her, og da blir det da et foredrag fra Åsmund i forhold til derivathandel på Nordnet sin plattform. Og etter det skal vi da ha et kvarter med spørsmål og svar, og da blir både meg, Sylvester og Åsmund da tilgjengelig. Så da er det bare å sende spørsmål enten på mail eller via denne chat-funksjonen, så skal vi også få svart på alle spørsmål som dere måtte ha etter Åsmund er ferdig med sin presentasjon. Så da tror jeg du bare kan bleke lerretet, Åsmund, så setter vi i gang.
All right. Skal vi se. Yes. Hei. Åsmund heter jeg, jobber som megler på Nordnet sin trading desk, og den er på hovedkontoret til Nordnet i Stockholm. Og her har jeg jobbet de siste 14 årene. Vi er en 10-12 meglere som jobber på meglerbordet, og vi hjelper typisk til med eksekvering av ordre, kanskje typisk litt større ordre, i form av blokkhandler, algoritmeordre og annen type handel som kanskje krever en eller annen form for manuell handpålegging. I øvrig så er vi involvert i diverse handelsrelaterte problemstillinger, og vi har kontakt med motparter, samarbeidspartnere, og markeder og børser som Nasdaq og OMX når det kommer til derivathandel. Telefonlinjen inn til oss, den er åpen fra 8:30 på morgenen til klokken 10 på kvelden når markedene stenger i USA. Dessverre så tilbyr vi ikke derivathandel i USA, ikke helt enda i alle fall. I dag skal jeg da få gleden å snakke litt om derivathandel og hvordan man går fram for å handle med opsjoner og terminer på Nordnet. Og det er utrolig gøy å se at interessen for dette her øker. Som Phil var inne på litt tidligere der, så har jo interessen for derivathandel blant privatsparere eksplodert i USA. Den har ikke helt eksplodert her i Norge enda, men interessen har i hvert fall begynt å spre seg, det merker vi helt klart. Nordnet er jo da medlem på Nasdaq OMX sin derivatmarked, og det betyr at vi tilbyr handel i norske, svenske og danske opsjoner og terminer, med underliggende som da er aksjer eller aksjeindekser. Jeg tenkte jeg skulle begynne med litt sånn grunnleggende informasjon, og hvor man finner dette på hjemmesiden vår. Derivatene, de noterte derivatene er det som man kan kalle standardiserte derivat. Og det betyr i utgangspunktet at man utifra navnet på opsjonen eller terminen vet, man kan lese ut ifra navnet hva dette er for noe, med detaljene for instrumentet. Hvis dere ser på høyre siden av bildet mitt her, så har jeg en sånn matrise med bokstaver, og alle opsjoner og terminer har en bokstav i navnet sitt som forklarer hvilken type det er, og når den løper ut. Kjøpsopsjoner har for eksempel kjøpsopsjoner har bokstaven A hvis den løper ut i januar, B hvis den løper ut i februar og så videre, frem til L for desember. Er en salgsopsjon i januar, så har den bokstaven M, februar, N og så videre frem til X for desember. Og på månedsopsjoner så er det alltid utløp, altså forfallsdag er alltid tredje fredagen i måneden. Det finnes også noe som kalles weeklies, som er ukesopsjoner, som har litt forfall oftere. Jeg kan vise litt etterpå hvordan den ser ut, men den har i tillegg en bokstav Y og en dato for forfall i navnet. På opsjonene og terminene så det alltid en multiplikator på 100. Det vil si at en kjøpsopsjon tilsvarer da, gir det retten til å kjøpe 100 aksjer. Så man skal alltid multiplisere med 100. 100 underliggende per kontrakt. På opsjonene så deler vi det inn i aksjeopsjoner og indeksopsjoner. Aksjeopsjoner av det vi kaller en amerikansk type, og indeksopsjoner av en europeisk type. En opsjon av en amerikansk type, den kan innløses når som helst fram til utløpsdagen. En europeisk opsjon kan kun innløses på utløpsdagen. Men det betyr ikke at hvis du kjøper en kjøpsopsjon i indeks, så betyr ikke det at du må sitte med den posisjonen helt til utløp. Du kan når som helst stenge posisjonen under løpetiden ved å selge den i markedet. Det samme gjelder aksjeopsjoner også, men der kan du både innløse og kjøpe aksjene du har rett til på en kjøpsopsjon. Men som oftest så vil det heller lønne seg. Hvis du vil stenge en posisjon i en kjøpsopsjon, så vil det ofte heller lønne seg å prøve å selge den i markedet, da det mest sannsynlig noe tidsverdi igjen i en opsjon, framfor å innlåse den og kvitte seg med aksjene. Terminer deles inn i futures og forwards. Og futures vil ha en betegnelse mellom A til L, og forwards M til X. Forskjellen på en future og en forward at en future har en daglig avregning, og en forward har en avregning på sluttdagen, ved utløp. Og typisk handles det futures på indeks og forwards på aksjer. Man kan handle en future på en aksje også, men det ikke like vanlig. Så jeg kan ta et eksempel da, med et instrument. Her har vi et instrument som heter EQNR 1L190. Og da, utifra, hvis vi stykker opp navnet da, så ser vi først, kommer underliggende. Det EQNR, det Equinor. Tallet 1 betyr at det noe som løper ut i 2021. Skulle det ha løpt ut i 2022, så ville det stått tallet 2 der. Bokstaven L betyr at dette en kjøpsopsjon med forfall i desember, og 190 striken. Så kjøper man en stykk av denne her, Equinor 1L190, så eier du retten til å kjøpe 100 aksjer i Equinor til kurs 190 med utløpsdag den 3. fredagen i desember. Kan vi se på neste her. Vi har noe som heter OMXO20 1J. OMXO20, det Nasdaq sin norske indeks. Den tilsvarende OBX-indeksen som mer kjent. OBX består av 25 aksjer, OMXO20 består av 20, og det de 20 største, mest likvide aksjene. Så dette instrumentet består av, det altså OMXO20, det løper ut i 2021, og bokstaven J betyr at det en future som løper ut i oktober. Under her har vi noe som heter AKBP, 1W. Det her altså, det gjelder aksjen AKBP, løper ut i år 2021, og det en forward som løper ut i november. Så terminer har altså ikke noe strike, og det ikke noe som heter en kjøpstermin og en salgstermin. Det en termin for hver måned. Tror du at underliggende skal stige, kan man kjøpe terminen, og tror du at underliggende skal falle, kan man selge, altså selge seg short terminen. Tenkte jeg å vise litt hvor man finner dette her på hjemmesiden vår. Der. Og her jeg inne da på en liten testkonto vi har. Og her har vi en kontooversikt med litt fond og litt aksjer og noen derivat. Og vi kan se for eksempel her har vi noe som heter AKBP 1I240. Det altså en kjøpsopsjon i AKBP som gir rett til å kjøpe aksjen med utløp i september på kurs 240. Og det har man da betalt 4 kroner for, 4 kroner og 3 øre. Så hvis aksjen går opp til 244 kroner og 3 øre, så det break-even på den posisjonen. Det 5 kontrakter, som da vil si at det 500 aksjer dette gjelder. Kan vi se at vi har et innehav på 500 aksjer i Nell, som kjøpt med en fin gevinst på. Og for å beskytte den gevinsten, så har man da kjøpt 5 salgsopsjoner på strike 13 med utløp i november. Så behøver man da ikke grunn til å være urolig for at aksjen skal kollapse. Så har vi en annen posisjon her, som heter OMXO21i. Det jo da futuren på OMXO20, med utløp i september. Og der ser det stå antall -1. Og denne ligger på ca. 1000. Og det jo der indeksen ligger nå. Dette altså en kort posisjon i futuren, men har altså shortet indeks tilsvarende 100 000 kroner. 1 ganger 1000 ganger 100. Denne futuren det trekkes ikke noe penger når man tar denne posisjonen, men det vil reserveres et sikkerhetskrav på kontoen din. Og det sikkerhetskravet ligger typisk på mellom 12 og 15%. Og det vil vises her oppe, øverst på kontoen. Sammen med saldo, så har man noe som heter sikkerhetskrav. Så akkurat nå, så drar den posisjonen et sikkerhetskrav på 13 000 kroner. Altså ca. 13% av eksponeringen som den posisjonen gir. Og ja, Tony snakket jo om en covered call. Vi kan jo tenke at vi vil gjøre en covered call på disse 500 aksjene vi har inne. Da skal vi gå inn og lete der hvor vi finner alle derivatene på hjemmesiden vår. Da går vi på børs og marked, og klikker på opsjoner her nede i høyre hjørne. Da kommer vi først til en screener, hvor du velger hvilken valuta, om det danske, norske eller svenske. Krysser av for NOK. Vi leter etter Nell. Finner vi den her. Og så kan vi se hva vi kan ta noe med litt lang løpetid, se om det finnes priser her. Nå har jo markedet stengt for en time siden, så det finnes ikke live-kurser her. Men vi skal se hva vi finner. Yes, vi har 500 aksjer i Nell, og da skulle vi kunne for eksempel her i november selge en call på strike 15 og kunne få inn et eller annet sted. Her ser man, siden jo oppdelt sånn at du har kjøpsopsjoner på venstre side av skjermen, salgsopsjoner på høyre side, og så har du innlåsningsprisen i midten. Og hvis vi da, Nell står vel nå i rundt 14,80, om vi kunne tenke oss å selge den om den går opp til 15, så får vi betalt minst 1,30 for det, sånn som det her nå, ved å selge den. Og som dere ser her, så ligger det da, det man ser på linjen her, det da kjøp 1,30, antall 20, salg 1,90, antall 20. Det vil si at ordreboken ser ut som følger, at det ligger en kjøpsordre av 20 kontrakter på 1,30, en kjøpsordre og en salgsordre på å selge 20 kontrakter på 1,90. Så hvis jeg ville gjøre en covered call her nå, så skulle jeg gå på selg. Kommer inn i ordreleggingen. Vi har 500 aksjer, da skal jeg selge 5. Og den ligger 1,30 mot 1,90. Jeg skulle prøve å legge meg midt i spreaden et eller annet sted, og selge. Da vil jeg bli beste selger i markedet. Skulle gå inn på ordre, og se om jeg har blitt eksekvert. Hvis ikke.
Åsmund, beklager å forstyrre, men vi ser ikke skjermen din, vi ser kun PowerPoint.
Ser du det?
Ja.
Sorry, det sitter jeg.
Så blir det litt enklere å hva skal jeg til å si, vise eksemplene.
Ja. Skal vi se. Der. Nå.
Der vi på, vet du. Supert.
Sorry. Da går vi tilbake. Vi går på børs og marked. Opsjoner. Og så sa vi at vi var i november. Her har vi da valuta nok, underliggende Nell. Sluttdato vi sa i november. Vi sier altså at vi villige å gjøre en covered call på strike 15 i Nell i november. Trykker på selg. vi har 500 aksjer, det vil si at jeg vil selge 5 kontrakter, og vi prøver oss, skal vi se. Vi legger oss på 1,45 til å begynne med å prøve. Og da selger vi. Går opp på ordre og ser status. Og nå står det jo at vi venter på at markedsplassen er åpen, i og med at det er stengt for dagen. Får vi ikke solgt på 1,45, går vi inn. Endrer prisen et tikk ned. Og endrer det. Og så gjør man det til man ser at det blir en handel. For du kan si, Nasdaq har jo en avtale med market makers som stiller priser i markedet, og det gjør de kontinuerlig under dagen. Derimot så finnes det market makers som ikke ligger med aktive ordre i markedet, men de kanskje ligger og sniffer i ordreboken. Så hvis man prøver seg fram i ordreboken, i stedet for å legge det vi kaller en aggressiv ordre, hvor du slår rett på market maker, så vil du ofte oppleve at du får kanskje 1 eller 2 eller 3 tikk i ordreboken bedre pris på å justere ordren din gradvis. Yes, jeg tenkte, dere fikk jo ikke sett kontooversikten her, da kan jeg vise hvordan det ser ut bare her. Det ligger sammen med aksjer. Her er futuren som jeg har solgt. Vises minus 1 stykk. Futuren ligger på ca. 1000. Det vil si at den har en verdi på 100 000, og sikkerhetskravet ligger på 13 000 kroner. Og som jeg nevnte, så er det jo også daglig avregning på futures. Og hvis vi går på transaksjoner og sluttsedler, skal jeg vise hvordan man ser det. Her ser vi, for 2 dager siden solgte jeg en sånn her til kurs 1002,8. Jeg får en sluttseddel. Det trekkes ikke noe penger. Det eneste som trekkes er kurtasjen, og det var 81 kroner for den andre, med en underliggende eksponering på 100 000 kroner. Når dagen var omme, så hadde indeksen falt. Det gikk altså i min favør, og den stengte på 1001,7. Jeg solgte på 1002,8. Den stengte på 1001,7. Og da fikk jeg inn i daglig avregning 110 kroner. I går steg børsen, så det gikk feil vei for meg, og den stengte på 1009,10. Da blir det trukket 740 kroner fra kontoen. Og i dag så stengte vel markedet marginelt opp, så i dag vil det også da bli trukket et beløp tilsvarende oppgangen fra kontoen. Yes. Det var det om hvor man finner dette på hjemmesiden vår. Kan jeg igjen vise litt her bare under opsjoner. Hvis vi tar underliggende som var indeks, og sluttdato, så er det sånn at futuren finner vi først opp. Lengst oppe på siden ser vi verdien på underliggende. På raden under ligger futuren. Da legger man bare inn en ordre her, om man vil kjøpe eller selge future. Og den regner også med multiplikatoren i ordreleggingen. Så om jeg da legger inn en ordre på å kjøpe en future til kurs 1000, så ser dere at totalverdien lander på 100 000 kroner. Og opsjonene ligger da under med matrisen med strike i midten, salgsopsjoner på høyre side og kjøpsopsjoner på venstre side. Skal vi si. Skal vi se om jeg klarer å få gå tilbake til min PowerPoint her da. Skal vi se. Der, Sylvester, kan du gi meg en tommel opp om du ser PowerPointen min? Fantastisk. Yes, et spørsmål vi veldig ofte får, det er hva skjer på utløpsdagen når opsjonen løper ut? Og der er det ganske stor forskjell mellom om det er et indeksderivat eller om det er et aksjederivat, altså indeksopsjon eller en aksjeopsjon. Indeks er ikke et instrument i seg selv, du kan ikke eie indeks. Indeks er jo en kurv med sammensatt av forskjellige aksjer. Og derfor det sånn at når en indeksopsjon løper ut, så vil den kontantavregnes. Det vil si at om opsjonen du eier når den løper ut, om den har en verdi, så vil du få penger inn på konto. Har den ingen verdi, så forfaller den verdiløs og forsvinner fra din konto. Hvis vi tar et eksempel som jeg har skrevet her, la oss si at du eier 10 kontrakter i en kjøpsopsjon i OMX O20 med en strike på 1000. Og ved utløp så står indeks i 1018. Du har altså rett til å kjøpe noe som verdt 1018 kroner for 1000 kroner. Verdien altså 18 kroner per underliggende. Da vil du få inn 10 ganger 100 ganger 18. 18 000 kroner inn på konto i form av en avregning, kontantavregning. Og opsjonen har løpt ut. Skulle indeksen stå under 1000 ved dette tilfellet, da har den ingen verdi, og den forfaller verdiløs. Og index futures, det viste jo jeg nettopp her, de avregnes hver eneste dag. Har du kjøpt eller solgt en index future, så vil den avregnes hver eneste dag fram til den løper ut, så sant du fortsatt har posisjonen. Går det riktig vei for deg? Altså du har kjøpt en future og indeksen stiger, da får du penger inn på konto. Går det feil vei, så trekkes det penger fra din konto. Det gjør det hver dag, frem til til utløpsdag. Og da vil det bli en siste avregning som gjøres da på den dagens weave-up-kurs, som en volumvektet snittkurs den siste dagen. Og så det, hvis vi ser på aksjeopsjonene, her det fysisk leveranse. Og fysisk leveranse, det betyr at det blir kjøpt eller solgt aksjer i henhold til opsjonskontrakten, dersom opsjonen in the money. Og hvis vi tar eksempler med den opsjonen jeg hadde i første bildet mitt, la oss si at du eier 10 stykker av denne Equinor 1L190. Vi kommer til tredje fredagen i desember, og Equinor står i 200 kroner. Ergo din opsjon in the money. Ja, da vil det bli kjøpt 1000 aksjer i Equinor for 190 kroner på din konto. Det vil altså bli trukket 190 000 kroner fra kontoen din, og du får inn 1000 aksjer i Equinor. Og dette jo viktig at du som kunde holder kontroll på. Du skal ha dekning til å la kjøpsopsjonen løpe ut dersom den in the money. Og du skal også ha aksjene på kontoen, eller mulighet til å shorte en aksje, dersom du har en salgsopsjon i en aksje, en aksjesalgsopsjon som in the money. Hvis du ikke har det, så må du passe på å selge opsjonsposisjonen din senest på utløpsdagen, eller rullere kontrakten videre kanskje til måneden etter. Rullere, det betyr at du stenger posisjonen som løper ut, og så tar du en ny kontrakt måneden etterpå. Slike rulleringsordre, det kan vi på meglerbordet hjelpe til med over telefon. Da legger man en ordre som består av 2 ben. Du selger en og kjøper en, og så betaler du en nettopris for det, som ofte blir bedre enn å sitte og gjøre dette i 2 steg direkte i markedet mot market making. Yes. Opsjonen skal jo være 1% in the money for at den skal automatisk bli innløst. Det kan jo være, i dette eksempelet så vil jo det si at Equinor må stenge på over 191,90 for at den automatisk innløst. Det kan jo være at Equinor stenger på 191. Da den ikke 1% in the money, og opsjonen vil ikke automatisk bli innløst. Dersom du vil innløse opsjonen, dersom du har en aksjeopsjon som in the money, men mindre enn 1% in the money, da må du ringe til oss på meglerbordet senest 15 minutter etter stengning på utløpsdagen, så vil vi kunne hjelpe til å innløse den for deg. Og dersom du har en forward på aksjer, så vil det jo da kjøpes og selges aksjer i henhold til terminskontrakten på utløpsdagen. Så tenkte jeg å gå gjennom litt av formalitetene som må være på plass for at du skal kunne handle med derivat på nordnet. Du kan kun handle dette på det som vi kaller en aksje- og fondskonto, forkorter ofte AF-konto. Og før du gjør din første handel, så må du gjøre en såkalt kunnskapstest. Opsjoner og terminer, det kompliserte, avanserte instrument. Og derfor så må du gjennomføre denne her testen som nordnet lovpålagt at du må gjennomføre før du gjør første handelen. Og du skal da vise at du har tilstrekkelig med kunnskap, og at du forstår produktene som du investerer i. Du må også fylle ut en tilleggsavtale som heter Derivathandelsavtale. Den finner du under kundeservice, altså i menyen, lengst oppe til høyre, så er det kundeservice, og så velger du skjema, og der finner du noe som heter Derivathandelsavtale. Den kan du signere med bank-ID og sende inn elektronisk. Og med den avtalen da, så får du en clearingkonto på Nasdaq. Det Nasdaqs, eller det derivatenes motsvarighet til VPS, altså der hvor opsjonene oppbevares. Har du denne setupen her, så kan du kjøpe opsjoner. Da kan du altså kjøpe en kjøpsopsjon, og du kan kjøpe en salgsopsjon, og du kan selge opsjoner du allerede eier. Men så lenge man bare kjøper en kjøpsopsjon, eller kjøper en salgsopsjon, så kan du bare tape ditt investerte kapital. Men dersom du vil gjøre kombinasjonsordre, utstede opsjoner, handle med futures eller forwards, da vil det bli et sikkerhetskrav på posisjonene dine, og da krever vi at du signerer det som kalles en belåningsavtale. Det betyr ikke nødvendigvis at du låner penger, men du kan havne i verste fall i en situasjon der man gjør det, fordi man kan ta, avhengig av hvilke posisjoner man tar, når man utsteder eller handler med futures, så kan nedsiden, altså potensielt tap, være ubegrenset. Og før du begynner med dette her, så er det jo viktig at du setter deg godt inn i hvordan disse instrumentene fungerer, og at du forstår risikoen i posisjonene før du handler. Yes. Shorthandelsavtale, det kan jo også være en mulighet å se på. Det gir deg større handlefrihet. Yes, disse avtalene kan også signeres med bank-ID. Yes, det var det jeg hadde. En liten oppsummering. Handler du med opsjoner, aksjeopsjoner først og fremst, som er viktig å holde kontroll på ved utløp. Sett en påminnelse i kalenderen din på utløpsdagen. Logg inn på kontoen, ta en titt på dine posisjoner. Er det noe du må justere, er det noe du må rullere, og så videre. Og vi på meglerbordet, det er bare å ringe til oss. Og spesielt det vi hjelper til med det er, la oss si at det finnes en opsjon. Du ser ingen priser i markedet, det er ingen market maker som kvoterer. Så kan du ringe til oss, og vi vil pinge markedet og prøve å få en market maker til å stille priser sånn at du kan handle. Vi kan hjelpe til å legge kombinasjonsordre, om det skulle være en rullering, eller om det skal være en bull spread, en bear spread, en straddle, hva som helst. Ring til oss, og vi legger inn de kombinasjonsordrene for deg. Og det samme, vil du innløse en aksjeopsjon før den løper ut, må du også ringe til oss. Det var det jeg hadde. Takk for meg, og sender jeg stafettpinnen over til deg, Mats og Sylvester.
Supert, Åsmund. Det har kommet en del spørsmål til deg også, Åsmund, så jeg tenkte vi bare gyver løs på det med en gang, hvis du er klar for det. Ja. Det første spørsmålet som kommer er, fungerer covered calls hvis du eier aksjene i ASK, eller må de være på AF-kontoen?
De må være på AF-kontoen, dessverre. Så man ser på dette bare konto for konto, ikke på et kundeforhold. Konto for konto.
Riktig. Et annet spørsmål også som har kommet inn ganske mange, eller i mange forskjellige typer former, men det går ut på det samme. Markedet er jo høyt priset nå, Åsmund, og det har vi jo sett at, gjennom sommeren at det er ganske risikofullt med diverse ting som da treffer markedet, at det kan fort falle litt. Det er flere som lurer på hva er den beste måten å sikre seg mot et eventuelt børsfall. La oss si at man har en strukturert portefølje med litt fond, litt aksjer og så videre som man gjerne vil være long i. Hva skal man kjøpe via Nordnet for å mest mulig sikre seg i forhold til et eventuelt børsfall?
Ja, har man en bred portefølje av norske aksjer for eksempel, da har man jo indeksderivat som en av mulighetene. Du kan kjøpe, hvis du skal kjøpe noe som du sa, da kan du kjøpe en salgsopsjon. Altså retten til å selge indeks dersom den faller til et visst nivå. Eller så kan du bruke futures, som jeg synes er et veldig fint instrument. Det er jo det mest likvide derivatet som finnes på Nasdaq, det er futuren. Den kvoteres kanskje med et par millioner kroner i underliggende verdi, med en spread på 0,05%, 0,0, veldig tett spread i alle fall. Tror du markedet skal ned, så kan du selge futuren. Har du en portefølje på 1 million, ja, da er det 10 futures-kontrakter omtrent.
Og dette tilbyr jo da også da på alle indekser, og selvfølgelig da på enkelte aksjer også, så du kan jo velge hvordan du eventuelt vil eksponere seg da, men jeg vil jo anta at hvis du har en bred portefølje, så er jo indekset veldig greit da, å kunne kjøpe disse instrumentene på. Jeg vet ikke, Sylvester, har du noen innkommende spørsmål fra din side?
Nej, der var et enkelt spørgsmål derude omkring eventuel udvidelse af udvalget af optioner. Og der vil jeg egentlig bare sige, at det er helt afhængigt af interessen ude på kundesiden. Så det er klart, hvis man sidder og har forslag til underliggende, vi har 27 norske underliggende i øjeblikket plus indekset U20. Hvis der er forslag til øvrige norske underliggende eller nordiske underliggende generelt, jamen så er det bare at bringe feedbacken til os, og så kigger vi meget seriøst på det sammen med jer, blandt andet og sammen med market makers, som vi selvfølgelig også skal til at have op og stille priser. Så hellere end gerne komme med feedback til markedet og komme med feedback til eventuelle nye optioner, som I ønsker derude.
Og det kan jeg ta fra Nordnet sin side, at det er også noe vi jobber med og ser på muligheten for, så jeg kan ikke garantere når det eventuelt kommer, men det er som sagt da noe man er i prosess med å se på. Og så er det jo litt i forhold til tilbud og etterspørsel også, i forhold til om man kan forsvare å ta det i bruk da. Men vi har i hvert fall en relativt god eksponering per i dag, og så ønsker vi jo selvfølgelig etter hvert da også å få inn amerikanske produkter også. Men som sagt, det er ikke satt noe dato enda, men det er satt i gang prosesser rundt det. Så jeg håper i hvert fall at det kommer i orden ganske snart. Så ja, bortsett fra det, da er det egentlig det er vel vært et veldig bra foredrag, og jeg har fått inn en del spørsmål, men fått besvart de viktigste, og da er det vel egentlig, gjenstår det fra meg egentlig bare å takke Sylvester, Tony og Phil for at dere kom og holdt dette foredraget for oss, både fra USA, som det da var for Phil og Tony, og fra København fra deg, Sylvester, og det setter vi kjempepris på, og selvfølgelig til Åsmund Sveen, vår gode norske utsendte i Stockholm. Så det har vært kjempegreier, så må i hvert fall takke alle sammen, og spesielt Nasdaq og deg, Åsmund, så regner jeg med at de fleste lytterne synes dette var veldig informativt og nyttig. Så igjen, tusen hjertelig takk for det.
Takk for at du fikk være med.
Ja, det samme her fra Nasdaq. Tusen takk til deg, Mads, og til deg, Åsmund. Og tusind tak til de 700, som sidder derude og har overlevet mit danske. Jeg håber, at jeg har været forståelig. Og så kan jeg kun repetere, hvad Åsmund og Tony også nævnte. Sæt jer grundigt ind i optioner og futures. eventuelt med brug af OptionsPlay, som Tony han omtalte. Og ellers så vil jeg bare sige tusind tak til alle jer, der så med derude, og tusind tak til Nordnet.
Likeså. Og inne på det også, for de som eventuelt har kommet inn i streamen nå nylig, eller ikke har fått med seg alt, men gjerne skulle tenkt seg å sett på alt, så blir alt sammen publisert i ettertid. Og hvis du da har påmeldt deg dette arrangementet, så vil du da få en mail med en link da, til arrangementet. Så da kan du gå gjennom både 1 og 2 ganger. Hvis det er noe som virker litt komplisert ved første anledning, så vil man da kunne ha anledning til å kikke litt nøye på det når man eventuelt da har tid, bare som man har sagt det. Så med det så tror jeg vi egentlig bare takker for oppmerksomheten til alle dere som har sittet og sett på oss. Det har jo vært som sagt en høy interesse for dette her, så det var jo veldig bra at både du, Åsmund, Sylvester, Tony og Phil kunne være med oss denne kvelden her og holde dette bra foredraget. Så det er vi veldig takknemlige for. Takk for det. Så til alle sammen så får dere fortsatt ha en fin ettermiddag.